Okay, good evening, everybody. It's Market Michael. It's May 7th here. I want to break some things down for you. Okay, you know, yesterday, this morning, yeah, I said, this looks like it's topped off. And, well, it's not like I was wrong. It definitely was topped off. And even yesterday, I didn't think it was going to be able to break that 50-day moving average, but we ended up breaking it. So, what we're looking at here is the NASDAQ comp. And what we're seeing is a jump above that 50-day moving average. But I just want to tell you something, that this is a candle that is called the Morning Star, and traders use it to check out reversals. So I just want to read you some stuff here, but it's probably just best. Where's a good picture? Here we go. Okay, guys, this is what we're dealing with. That's a shooting star. So pretty much it's a very reliable indicator that it's going to reverse here. And the fact that we've jumped above that 50-day, the fact that we just had this humongous swing up, I'm suggesting that we're going to have a big swing down. As of now, stocks aren't really swinging down too much. On medium time frames like an hour chart, they're looking like they're gaining some support. But we're going to have to see. I would imagine that these guys are, not going to be able to fare too well with this setup. We establish lower highs, although we have higher lows. That's going to change. We're going to pluck in an all new low here. Maybe not as low as this, 6,700, but definitely going to that 6,800 test level. That's what I'm seeing, guys. Now, let's get into some charts. I just wanted to make myself big so that way everyone can see me and I'm not just hiding in the corner. But I think it's time to hide in the corner. Let's check out the markets. So we're all on our charts. Dow Jones is on a 30-minute. And we're starting to see this decline here. I'll back it out on the hour charts so we could compare. Okay. So, for the S&P, we haven't even established higher highs. Six, 2682, 2681. See, we're getting lower highs for sure with the S&P. Even on this guy, we're getting lower lows. Comp is doing much better because of Apple, because all the big names are in it, and that's why we're seeing massive increases. We've gotten definitely a pop above this 61%. We came out of the channel, but check out here. We've have major resistance. Again, we're not even coming to those highs. I suggest we're going to back off, and we're going to start to back off aggressively at this point in time. Let's look at a daily chart. Again, this daily chart is kind of peaked off or at the top, and it looks like we're going to come down. We may get support, but I don't think so. I think this is going to be it. I'm calling it now that this is the beginning of this reversal here. We're getting that morning star. It's that sign to come back down. It's a pretty well-known candlestick pattern. The fact that we got lower highs from before, we haven't been able to pierce this fib line. We're just barely negative on the day as of right now on the futures, so we're just going to have to look into that. As far as gold is concerned, I think we have to back down to that 1300, double bottom off the 1300, and then rise up. You're looking at a daily for gold. I'll pop up silver. We'll check out silver. Same thing, essentially. Let's look at a 30-minute. Yeah, up, down, up, down. Wants to break out. We're getting some positiveness, but I'm not sure if it could do it. Gold on a daily looks great to break out, but we are slacking a little bit. You know, look, yeah, see, look at on this hour chart. We're starting to come back down. We're gonna probably go back down to that 1300 level. You know, let's check out Bitcoin. I haven't followed Bitcoin in quite a long time, so we did end up popping to that 10,000, 10,500 mark, really 9,800, which I was kind of expecting. But here we go. Look again. We are hitting resistance, and I say Bitcoin is over and done with. Toast finito. Adios. Let's check out the 10-year. Let's also check out the 10-year, 2-year spread. That's T 10 Y 2 Y Fred. And we're going to have to pop that up on a daily. And again, we are getting these lower. We got 4.5 yesterday, so we are just entering the negative here for that 4.4. We're hitting that 4 level soon, and I see under 4 this week perhaps. It's only Tuesday. We could definitely get big drops. This inversion is here to stay. You know, this was our moment. If we were to try and break above it and reverse this trend, I don't think that's going to happen. So that 10-year, guys, that 10-year, these yields should go down more right now. This daily chart is telling me that we entered this pullback. We failed this breakout above the simple moving average, and we're going to retrace. Now, I say we retrace to 28. Possibly even 28.9, 29, but we're already high, and I could see the Fed buying lots and lots of bonds out the back door, you know, try and stabilize the market. But I don't think the market even is going to react, because the market's going to be it's down at that point. You know, this is it, guys. This is what we've been waiting for. We've been waiting for the signs for that key turnaround for stocks to come back down, and this is it. It is possible for a continuation, but that shooting star pattern is pretty known by everyone. Unless the Fed comes in and does some really funky stuff, guys, I still see that scenario happening. Let's check out the dollar, because the dollar is pretty interesting on what's going on, breaking above this 92 handle, which I didn't really expect. I expected us to bounce and below, but it seems like we are flagging here, doing a nice pennant. It seems like we're just going to keep going higher. We keep getting higher lows. We'll probably get a low 92.6 perhaps is where we'll find support, and then keep moving higher. But, you know, this move can go to 94, in which case, if it does, it's most likely to fail here. We are weakening in strength, so I would imagine no matter what, at some point it's coming down. It can do a double move higher, but judging by the strength of this rally and the uniformity of the light green and dark green MACD, I'm going to say that this is a one move up. In addition, we're getting some conflicting information with the CCI. The CCI has gone down a little bit, meaning we could still pop above, and if we even have a slight keep going down, that CCI is going to come down enough to the point where we could go up again, and we could have that last push higher, which is possible for us to have a last push to 94, fail it. Let's look at a monthly, because this is pretty important. This is how they get their bonds paid out. So again, on a monthly chart, we are doing good, curling up. Again, I think we're going to switch. An hour chart, we're just flat. It's pretty much not a... Let's check out a 4-hour. Again, 4-hour shows it wants to break out. I don't know. Again, there's not really much risk reward. Let's check out crude. So again, we're coming back down with that CCI. That's a negative candle, so we can pull back. Again, if we don't get this breakout here, I am suggesting that there's going to be a slight pullback. Now, I was expecting this pullback to continue into the 66s, 65s, but it looks like we actually ended up going the other way just because of this situation with Iran, and it's buy the news, sell the facts, so everyone's trying to get this out. And finally, I would like to cover some economic data. Now, we got a decrease in consumer credit. What this is telling us is that raising rates via 10-year, raising rates via Fed is slowly contracting the economy. It's people are less able to take on this credit, and less credit means less expansion, means less money velocity. So this is just one of the many indicators that the economy isn't doing as strong as everyone likes to believe it be. Uh, Again, rates, rates are going to keep rising, and the Fed is way behind the curve, guys. They're way behind the curve. They think it's okay for the inflation rate to be above 2% because we were under 2% for so long. So they called it symmetry. They said they wanted it to be like 2.2, 2.3, 2.5. But again, I think they're not going to be able to control it. It's going to get out of hand. I'm not sure really what's going to happen because part of me knows that we're going to have deflation. We're gonna start to see a deleveraging of the economy, which isn't inflationary. But we are experiencing inflation, and the inflation is getting worse. All of these things are kind of, it's like a melting pot of shit that's about to explode, guys. I really don't think this economy is strong as everyone says it is, and I'm sure you guys can agree. It's all fake wealth by the Federal Reserve. Now again, I just want to pull up one last look at the markets. What do we got, guys? Again, shooting star, shooting star. We're at a 4-hour. Shooting star. Look at that. Again, we've bounced off the 23%, meaning it wasn't, we would have bounced off this 38% if it was ripe. Right, guys? And again, we bounced off this 50% fib, which isn't ripe again. Just signs that we aren't ripe. We can't break out of this 61% on the S&P. We can't break above this 38% for the Dow. And for that NASDAQ, we can't break above that 100% fib. Let's actually go ahead and put a new fib because so we can't break above that 78%. And we did have trouble breaking above that 60. So this 7,000, 6,900, 700 mark is going to be critical for us to pass through. If we look at a 4-hour chart, we could start to see the markets kind of decline and wither. We're at the top of the range pretty much. So this is going to start declining rapidly. We're at the top of the range. I'm assuming we failed this breakout above this pennant. So we're going to fail, come back down, and if we don't fail this 7,000 and continue to go higher, that's a bullish sign. But what I think is going to happen, and what is likely in the bearish scenario, is that we go ahead and fail it, absolutely drop below this 7,000 and pierce that 6,800 level, bounce above and get lower lows, guys. And I think this market is going to be sluggish. We're not going to get those big, we're not going to get 1,000-point drops, guys. It's going to be more consistent, and the market is going to start to deteriorate. I mean, these stocks are doing good, like Amazon. Fang's doing good, but that Fang isn't the market. Boeing isn't the economy. It's kind of crazy that we get this push green, you know, on this daily chart. I think the only reason that's so is because we had such an amazing day. Let's see what a 4 hour's telling us. A 4 hour's telling us we're still positive, but this is a transition. We're not yet completely weakened. But again, we need to look towards the future, and the futures we will look. So again, what we're seeing, this is we're looking at 4 hour charts, guys. We are starting to see this flatten, decrease, completely flatten. Oh, you know what? Let's again check this out. The only indice that was overbought was the Nasdaq again. So I'm gonna give you guys support and resistance levels that this market's gonna crash to. For that Dow, we're going under 24,000. That's a fact. And we could even end up at the I think 23,000 is where we're going to find support, guys. S&P, we're at the support right now. Oh, these are freaking futures, guys. Yeah, I'm not going to give you the fucking shit for the guys, look at the fibs. 38, 68 is critical. 50 is pretty important. 23 is important. They're all very important. So all of these lines, guys, are intense lines. You could check them out, visually see what's going on. I don't have to babysit you and tell you what you need to look at. You guys should know what to look at, and if you don't, comment and I'll help you out. Or you could even message me, guys. Message me and I will teach you how to trade. But I'm just covering daily markets. I'm covering what I think the direction's going to go. Maybe to help you make a trade. Maybe just to inform you. Some people don't have time to look at the markets all the time. But this is an in-depth analysis of what's going on. So, with all that being said, guys, thank you very much for watching. Please like and subscribe. I'll see you bright and early in the morning. Tomorrow I won't be able to make videos. I'll probably make 1 or 2 videos in the morning, and then after that it's going to be bye-bye. Maybe I'll make a video recapping the situation, but I think I'm going to have to put my shorts in right now because that morning star is a pretty evident sign that we are going to fail this next leg up. I mean, we're already coming down on the futures, so thank you very much, and take care, guys.